I'm with Colin Evans from Evans Financial. Colin, thanks for joining us again on the Hometown Show.
Thanks for having me.
Colin, today we're talking about inflation. It seems like everything's gone up lately.
I know it's we feel it at the pump, we feel it at the grocery store, we've seen it in the housing market, in vehicles. It's through the roof, and it's really hurting, a lot of people that are sitting on a fixed income.
What exactly is inflation?
In a reality sense, inflation's not a bad thing. Typically, we're showing that, as cost of goods increase and as typical your cost of living is going up, but also your wages are typically going up as well. Historically, wages are going to outpace inflation, but as we're seeing right now, that's actually not the case, and this is where it's truly starting to, really hurt the pocketbooks of our citizens, of our country. It's like we're feeling that when gas is $5 or $5+ what was $60 to fill up a tank now might be 80, and that hits a budget, quite harder. Where it really starts to impact too is those that are at retirement time. Those who are at retirement time are now, I'm living on a fixed budget. This is, I don't have a job. I don't have wages increasing anymore or that opportunity for that. So that's throwing things for the loop. And, with the kind of the cusp of over COVID, when we really started having supply chain issues, was kind of really the key start of it. We see that occurring. We've had I would say, political chaos. We stopped drilling here in the U.S. for the most part and are bringing in foreign oil. So now our economics of supply and demand are, the supply is in shortage and the demand is higher. So unfortunately, the prices are there to reflect that. And this is where it's hitting all of us. And we're really all starting to feel this more and more as we keep going.
What should we know about inflation?
Things that we get to know about it is, it used to be, and, we would think of inflation, it was sometimes an opportunity as growth and economic growth. And fortunately, right now, we're not in, I would say, crazy inflation like we saw in the late 70s, early 80s. And I remember I was a tiny tot at the time, but when you would see like your bank CD rates were 12, 13, 14%. Well, so also were your mortgage rates at that point in time. So it's like we're not there yet, but just back in May of 2021, we had crossed over about a 5% rate of inflation, and it was either yesterday or day before on the news they were stating that we have surpassed about 8.5% inflation. And here's what kind of throws people for a loop just a little bit is they're going, 8.5%, but gas has almost doubled. My grocery bill has, almost been about 50% higher than what it's been. Unfortunately, that's not in the calculations anymore. Our government took that out of the calculation factor, so they no longer calculate food, they no longer calculate healthcare, and they don't calculate energy. And there's some reasoning for it that's understandable. It's like, in kind of economics 101, when we see supply and demand, we've seen it in the past when, several years ago when we did see gas go up to $3 and $4 a gallon. And the oil industry is always up and down. We don't see it too much with our food, but we do see it in healthcare. And one of the other reasons why it's not calculated actually in the CPI, the Consumer Price Index, and in that calculation, is you're taking into account if somebody has a gigantic health scare. I might be perfectly fine all year, and I might have, my premiums for my health insurance might cost me X, and then my cost of insurance might only cost me X, but then I have a dramatic health scare, and now I've got a $15,000 incident or a $20,000 surgery or something like that. That kind of throws it for a curve. So that's why the government actually removed those from the calculations. So you kind of have to take that into consideration. And where it really concerns us is with retirees, being that's kind of where we dive into with our clientele. And when we're looking at that from a fixed income perspective and into that retirement stage, these are things that retirees really have to pay attention to as well. It's like, okay, now do I have any other opportunities for the growth that are out there? Or can I specifically go look into some more, I will say, tax planning and better strategies to make those retirement dollars a little bit more efficient and paying attention to in today's day and age?
Colin, you have a free inflation report our viewers can download.
Yes, we do. We actually just released it a couple months ago. It's at inflationnavigation.com. We actually dive a little bit deeper into some of these topics. One of the last things of how you can prepare for inflation, retirement, avoiding long-term fixed investments, looking for strategies that might guarantee income. Budgeting, unfortunately something we still have to do all the way into those golden years, but, download it. We put it out there. It's inflationnavigation.com. It's 100% free. You can download it on your smartphone, your desktop, and print it out at your leisure.
Inflationnavigation.com. That's easy enough.
So we tried to make it a little bit simple.
Colin, thanks for joining us.
Thanks for having me.